All right, welcome back. 6,219 on the Nifty. Let's just put up tech stocks and take a look at the 1 month returns. We'll have Shashi Bhusan, who's joining us to talk about what's happening, especially in the mid-cap part of the technology stock list. Shashi Bhusan is Senior Research Analyst Institutional Equities at Prabhudas, Lilladher. But first, the stocks. Tata LXI, this is all last 1 month, 35%. Mastech, 25%. NIIT Tech, about 16% or so. There's eClerx, which is up about 16%. Mindtree, 14%. Rolta, about 12%. Geometric, 15%. Infotech Enterprises, almost about 12% or so. First Source, 14%. And there are a few more, I'm not getting into that, but this is essentially the bulk of the mid-cap tech, mid-cap, small-cap technology pack, which has done quite well over the last 1 month or so. So, I mean, explanations are varied. Mid-caps playing catch-up to large caps. PE ratios are still very attractive. And, of course, the big, broad tailwind is spend picking up in the U.S. Technology spend picking up in the U.S., which kind of is supposed to lift all boats. But is that really true? Is that argument really true, and does it hold water? Shashi, good morning. Good to have you with us here. How would you sort of look at the rally that we have seen so far? And first, just talk about the run that we've had. Is it remarkable in your view? Is it unremarkable? I mean, there are reasons, specific reasons behind it.
So, if you look at the performance from most of the mid-cap names in the last quarter and the commentary coming from the management, that has been very encouraging. Not all of them has done extremely good, but commentary has been good about the deal pipeline. Now, if you look at the market per se as a whole, whether it's US, Europe, we are seeing good recovery, and that's the commentary we are getting from not only from tier 1 Indian IT companies, but also from the global tech majors. Now, most of these small cap and mid cap companies have done a little bit of introspection over the last 2 years, built their niche, focus areas, and some of the focus clients as well, where they want to put their energy and resources at work, and they are seeing some early signs of returns coming from those investments they have made in the past. Now, if you look at the deal sizes has also shrunk, and that has been the commentary over the last 3-4 quarters. Now, smaller deal sizes definitely suit some of these mid-cap and small-cap players more so. For large cap, I'm not saying that they are at any disadvantage. They are not going to leave anything on the table for anyone. They are really aggressive on that. But some of the focus area where these guys are pretty strong, they are expected to gain some traction. Now, for a say for an example, if $20-30 million deal would do a great deal for a company like Mindtree, but hardly swing the needle for a company like TCS. And that's the reason why you are seeing lots of this mid-cap and small-cap names seeing good uptick in the stock price in the last 2 to 3 months.
Yeah, but why would a $20-30 million deal go to a company like Mindtree or a small company, and not like a big not to a bigger company, which is more reputed?
No,
which is, yeah.
No. I didn't say that it will always go to Mindtree. What I'm telling you that if there are 30 such deals, now for TCS or for Infosys or Wipro, if they want to have a significant impact on the revenue momentum, they have to win out of that 30, perhaps 20 or 25. Mindtree, out of that 15 or 20, they are participating. They have to win 1 or 2, and they will have good swing for 1 quarter or 2 quarters in terms of revenue momentum. I'm not saying that large cap companies are not going to win those deals. They are at the sweet spot where they can win lots of bigger deals. We have seen some of the recent news flow. Yesterday, Wipro announced 1 deal and such. And other companies also have announced many such deals in the last 2 to 3 weeks. But what I'm telling you that these small cap and mid cap companies are winning few of those which will have significant impact on the revenue momentum of these companies.
Right. But if you just again a broader question, and then we can talk about stocks. If you're betting that spend in the US will pick up quite a bit, is it better to bet on the larger ones where disclosure levels are pretty good, where cyclicality might be lower because they're well diversified, or I mean,
No.
it's yeah, you would recommend going down the list?
No. So, okay, first thing which I want to correct that, the budget is not going up significantly. It will be marginal uptick, but the offshore and outsourcing component of that budget will be higher. And some of the existing work also will shift from on-site to the offshore location like India or to the outsourcers like Infosys TCS. Now your question about betting on the large cap vis-a-vis mid cap and small cap companies. Now in the case of large cap, the gap between the large cap and the mid cap is huge. Now you have $13–14 billion revenue company like TCS, $8–9 billion company like Infosys. You have Cognizant, you have Wipro, HCL Tech, but then there is a huge gap. After Tech Mahindra, there is hardly any company which is there in $1 billion. Emphasis is there, but they have their own set of problems. Then from $3 billion till $500–600 million, you don't have any company to invest in. So it's not that this small cap and mid caps are replacing the large cap in the portfolio of the fund managers. But it's just that to create some alpha in the sector, and they are investing or they are taking bet on some of these quality names. Now coming on to your question of the disclosure level, tech industry I think is blessed in terms of disclosure and corporate governance, because most of the leaders and even the mid cap and the small cap companies have got fairly good disclosure and strong corporate governance. Companies like Mindtree, Persistent, even company like eClerx and NIIT, all of them have got good, corporate governance, and nobody can doubt that, and they can match one of the best in the industry. So disclosure levels are definitely not a problem. Corporate governance is definitely not a problem. It's just that they want to create alpha in their portfolio, so they are taking bet on some of these quality mid-cap names, and that's why these stocks have done well in the past and will continue to do good.
What are your best ideas in this space?
So in the large cap, we continue to prefer Infosys, Wipro, and TechM. And in the mid cap, we prefer Mindtree, Persistent, and NIIT Tech.
Can you just talk about Mindtree specifically? As you used that as an example earlier as well. I mean, what are the big sort of factors driving that view for Mindtree?
Okay. Okay. So we have been bullish for quite some time. It's more than 6–7 quarters, and the stock has done remarkably good in terms of behaving as per anticipation. Now this company was a struggle in the past because of the forex loss, the acquisition going bad. And all sort of troubles, which actually hit some of the investors. They went back to the basic. They started focusing on some of the key areas which were their strength, like retail, CPG, and they targeted, or they did some tail trimming also. They targeted some top 100–200 clients from where they have potential to get good business. The traction started improving. They hired account managers. They built in-house training facilities for the account managers also. They are seeing some good traction. The deal win has been improving over the last few quarters. They gave, I think in this quarter they have said they have signed around $130 million TCV. So my sense is that this company is all set to deliver better than industry growth rate. They have invested good deal in the resources also. Their utilization level is at all-time low, which could go up and hence will provide some tailwind to the margin. So investors are taking into account all these factors, and that's why they are investing in the stock. And our expectation is that the stock will continue to lead the mid-cap space.
Which were the other ones, mid-cap?
Persistent and NIIT Tech.
Persistent and NIIT Technologies. Persistent and NIIT Tech and
Yeah.
Mindtree. All right. Right. You have coverage on HCL Tech, right, Shashi?
Yeah, we do have coverage. Yeah, we do have coverage on HCL Tech.
Okay. So there was this report, and I just want your thoughts on this. That Mr. Shiv Nadar, the promoter of HCL Tech, is seeking to sell his 62% stake in HCL Tech, currently valued at a little over about $10 billion or so. Right, so it's a large, very significant transaction if it goes through. The corporate communications team at HCL Tech has almost denied this, that there is any chance that this will happen, but this was a report which appeared in the Wall Street Journal. JP Morgan put out a note yesterday, and I just want to read out the points which they make. So they basically are asking the question, hypothetically speaking, who would be a potential suitor for HCL Tech? And this is what they say, that the sheer size of transaction is a stringent and limiting factor. Some of the more patient Japanese firms might be able to pull it off financially. A clutch of major private equity players in concert with a corporate might also be a contender. But for private equity players, it's not clear if that current valuations will be attractive and they'd want to come in. European interest seems quite unlikely according to them, and they're citing, a balance sheet strength, etc. there. And the thought that big software majors like SAP or Oracle could be suitors that scenario can be dreamt up, but that again is a long shot. Shashi, what is your sense? How do you think about this?
No, the company has been very clear that Mr. Nadar is not looking for an exit. In some of the recent media interviews, he made it categorically clear that he is not looking for an exit from HCL Tech. And I also hold that view, given the size of this acquisition. And services company is a very different industry when compared to any other old economy industry. Herein, your acquisition has to work perfectly well in terms of planning. There are lots of HR issues that you need to iron out before you make an acquisition. Otherwise, you are left with building computers and nothing else.
Sheer size is very, very big. Shashi, thanks very much. Good to have you with us here. Appreciate you joining in. And thanks again. Shashi Bhusan at Prabhudas Lilladher is on mid-caps largely, mid-cap technology, and the run that they've had. He likes a couple of names there, Persistent Systems, NIIT Technologies, and Mindtree as far as mid-caps go. 62.16, 17 points higher on the Nifty, so not exactly running away. We are back in 2 minutes. Vivek Veda is consumer analyst at Espirito Santo Investment Bank. He's joining in when we return on the consumer stocks. United Spirits, of course, and special focus as well. Back in 2.